All right, sorry. Back again. Third, not copy trading, just watching and learning. Welcome back. What's the plan today? Still waiting for price to potentially close outside this range. And seeing how it closes, what happens. But ideally, what I would want to see ideally would be a pullback, you know, kind of for these lows. That would be the ideal part, but I'm going to be playing it by ear and seeing what, you know, price gives me. All right. Might trade small. Oh, I forgot to check. Yeah, somebody mentioned news earlier. Is there news? Let me check real quick. Sorry, I was trying to... My OBS was being... All right, Forex Factory. What the heck? Bro, I'm tripping. I opened up my email on accident instead of Forex. Alright, Forex Factory. Today, Wednesday, October 1st, 9:45, yellow folder, 10 a.m. red folder. We got PMI at 10 a.m. So big news at 10 a.m. PMI, 9:45, there's news, but it's yellow folder. It's not as big a news event. So that's not really something I'd worry about. The 10 a.m., although, is a red folder, so got to be careful for that 10 a.m. news. So be mindful of that. All right, we're getting the pullback. Failed to close above that 5-minute range. Getting the pullback. We'll see. Like I said, ideally, I would love for price to come down, take out these lows. That would be like, for me, that would be a better case scenario. Right now, I mean, we do have a gap right there. There is a gap that potentially see what price does when it fills this gap. Yeah, yellow folder, what, 3 minutes? Yeah. I don't think it's going to do much, so... We may actually move sideways till that red folder comes out, who knows. Price may kind of just... Alright. Seeing what happens when we fill this imbalance. Looks like price wants to come down and potentially fill this imbalance here. But depending on how it's going to react... hasn't filled it yet. Buyer's trying to step in. So far, just going sideways. It actually took out a 15-minute low before it moved up. Right here, this 15-minute low. It took out that 15-minute low and then started shooting up. So, yeah, we got some imbalances that still have to be filled to the downside. But as you can see, I mean, structure is pretty bullish. That's not to say price can't come down and take out this low one more time, and then that's what I would want to see. But you know, if we get a short opportunity, I'll take that too. I'm not opposed. We got, I mean, there's pre-market highs are up there, at like 24,880 level. So we got pre-market highs up here, so we'll see. Ugh. How did yesterday end? Yesterday was a break-even day for me. Yesterday was break-even. So, it's fine. What time frame you use? 5 minute. I mean, I pretty much look at every time frame. I use the 5 minute. I use the 1 minute. This is the 1 minute right now. My levels are marked out on the 5 minute. But I look at every the major ones. 1 minute, 5 minute, 15 minute, 30 minute, 60 minute. But the bigger time frames, I look for imbalances mainly, you know, to see if there's any imbalances potentially to the upside or. Yeah, occasionally, yeah, I do use 1 hour, occasionally 4 hour, but I rarely go to the 4 hour. I usually go to the 1 hour the most. Price is still failing to close above. Did we get that? Yeah, see, we got 9:45 news. I mean, that really didn't do anything. Nice. Right over all my freaking wires so that. Again, let's see what happens when it fills that imbalance. I mean, it's rejecting off that pivot point too, up there. Like a perfect rejection off that pivot. That's why I say these pivot points, man, are good to have on your chart as like, you know, gauges of, you could see price came up there, rejected. So if you were in a long and you had that pivot there, you understand that price could reject there, and it did. So you could have partials up there, taking partials off, taking, you know, or take your full position off. 24,700 has imbalance pretty much on every time frame. 24,700. Yeah, there is that imbalance down there. If price could get down there, I mean, there is an imbalance. Yeah, it's on the 15 minute. This kind of imbalance right there. So yeah, I mean, that's a potential for price to kind of come down here, potentially take out these lows, fill this imbalance, and then start moving back up. Right now, price is really starting to tank to the downside, which it's what I wanted to see. I said, right, I would prefer price to come down and kind of take out these lows one more time to see what happens. There we go. Wow. Hopefully, I don't get a setup before news like yesterday. Now, is this going to be the time where price breaks? Actually breaks out of that 5 minute range. Let's see. Now we got an imbalance forming to the upside depending on how this candle closes, obviously, but there we go. Sorry to all the people trying to long. I know people were probably stuck in a long right there. Telling you, that's why these pivot points, man, look at this. Pivot point, pretty much rejection off that pivot. And that 5-minute range, right? The top of that 5-minute range failed to get above it. Boom, sold off. All right, there's that first close below that 5-minute. See what happens here. Now we got imbalances to the downside, right? Yeah, if you're short, be careful here too. This could be an area where price can reverse too if you're short. We're at that bottom of that 5-minute range. It could very likely push back into the range and start moving back to the upside. I mean, you don't know if today's going to be one of those days where we're just going to chop, kind of like, you know, get these big swing up and down and... Yeah, retesting this 5-minute low. I mean, I like this. So far, this is a good setup for me. If this can actually, you know, play out. Kind of like what happened yesterday, but I don't want it to be a repeat of yesterday in a sense of like me getting in before news. That's the only thing. I don't know why I always get a setup right before news. And it's like, I take it. If it's there, I'll take it, right? And I'll just have a stop in place just in case. But I would prefer not to. You know, we got 9 minutes till news. So I would prefer to get a setup after news. 600 on puts. I'm out for the day. Nice. Nice. Yeah, make the money and walk away. It's a good plan. Protect it. There's no reason to try to catch, you know, every single move. You caught one good move, you stuck to your strategy, caught a good move, then 185 on one lot MNQ. That's good. Yeah. That's good. All you need is one predictable All you need is one predictable move per day, right? You wait for something that you see very predictable, and you know, you kind of take that similar move every single day. You look for that one predictable move every day, and that's all you need. Ninja Trader. All right, we're looking good. Got 8 minutes till news though. Price is kind of rejecting off view op. We have view op right below that 200. This gold line right below it is the view op, so it's rejecting that view op area. Price kind of needs to get through view op. If it's gonna go up, it's got to get through view op and kind of like what yesterday happened, right? It was rejecting, and then finally when price actually started to really break view op, it started to go. As of now, I'm more bullish right now than bearish. Price may, like, I'm fine with price still coming down, and potentially there's a low. There's a 15-minute low down there that I wouldn't mind price kind of taking out. Oh gosh, it's setting up for... Starting to kind of push above view op. Crap. Nope. No gap. I thought it was about to start to form an imbalance, but no. I mean, this is good, right? This is good. I prefer this to fill, you know, if it fills this imbalance kind of, maybe has a little bit of a sell-off and then starts making another gap. Now that it filled this imbalance, I kind of don't have to worry about this imbalance anymore. Versus, right, if I was getting into a long down here, I have to worry about this imbalance because it could fill this imbalance and then reject. So now that it filled that imbalance, now if price starts to kind of develop, if I do end up getting in a long here, I don't have to worry really about this imbalance anymore. My target could be a little higher now that it filled it already. So, it's good. I let price, you know, do its thing. Just be careful because, right, news is coming out. Maybe it's chopping. We're going to get some, maybe chop action before. Waiting for something better. There's a super tiny imbalance, but I'm not... That's too small of an imbalance. I don't know. I don't... Yeah, this could be... I'm gonna wait. I'm gonna wait. Like what happened yesterday, this was similar to what happened yesterday. What it did yesterday was it ended up right before news. It ended up pulling back, taking out this low one more time, and then you get a really good setup, right? So I'm not gonna be too quick to jump in. There's a super tiny imbalance, but I don't like taking these tiny imbalances because a lot of times they just get ran through and right, and it's just like there's a high likelihood if it could run through it, no problem. It doesn't hold much weight, right? Yeah. I'm not gonna rush into it. It's easy to rush into it knowing that, like, oh, there was a tiny imbalance, now it's running without me, like, I'm gonna let it. This is NASDAQ. I mean, I would still potentially, if news comes out and it kind of... Let me see. This could be a nice entry point. If it doesn't take out this low, if it pulls back to this imbalance, maybe a good entry point for a long. All right, 57 at this point. It looks like I'm gonna get a setup right before news. Shoot. Do I take it? All right, I'm gonna manage risk. I mean, I'll take it if it gives it to me, but I'll manage risk. All right, let's see. Not the smartest thing to do before news again, but all right, news in like 1 minute. I think news can propel this thing to the direction it wants to go. So that's should wait. Yeah, it's a risk, but I'm risking it leaving without me. That's the problem. I think if it wants to go for those highs, a lot of times news will propel it. So it's like I'm fine with taking a loss and then, you know, getting back into it if it, but we'll see if I should have waited. Bruh, it's already getting crazy volatile and news hasn't even come out yet. Yeah, crap. All right. All right, let's see. There we go. News is out. And all right, we're starting to get buying pressure come in. Let's go, let's go, let's go. Let's go. Come on. All right. There we go. We're holding view up right now. We gotta start pushing through view. I mean, we gotta start really ripping here and not get below view up. When we get below view up, it starts to look bad for the bulls. We're still very bullish still. Let's see it. Let's see it. Let's see it. Let's see it. Come on. There we go. Seller's trying to step in. Inverted that fair value. Yeah, I mean, that's doesn't really mean much. It's just a 1 minute fair value gap. It doesn't hold much weight. If it was like a 15-minute fair value gap and inverted, that's a different story. But I think we still got, it looks like it wants to go up, right? Come on. Do you look at VIX? No, I don't look at VIX. No, news had a little impact. I mean, it got pretty volatile during news. But it got volatile, but it didn't really go much, you know. It kind of got volatile and just bounced around sideways a little bit. Didn't have any like crazy swings. All right. Here we go. Let's go. Let's go. Come on. Rip it. It really just doesn't have the strength. Don't jinx it. I'm over here getting anxiety from this freaking move. Anxiety! This market's trying me. All right. So far, we're looking pretty good for a shot up there. As long as the momentum keeps on going, I think we could rip through. There we go. There we go. We gotta keep it going. Keep it going. Don't stop. Don't stop. Don't stop here. Don't stop. Come on. Come on. Rip it. Rip it. I'm gonna put my TP actually at these body candle highs. I'm not going to get greedy. I'm going to put it at the body candle highs. I think I actually a little bit over leveraged on this trade. Come on. I don't know how I risked. I ended up getting a little bit too much contracts. Oh, crap. Come on. Let's go! Don't stop! Gosh, this is causing me... Come on! Oh, crap. Bro, you freaking kidding me, dude. I'm stressing out because I over leveraged a little bit on this trade. I don't know how I didn't do the math right. Come on, are you freaking kidding me? Like, this is the problem with being a little too heavy in size, is every little pullback starts to freak the crap out of you. Alright, let's go, let's go. Rip it. Push it. No, I'm not trailing my stop. Like, I'm not being greedy. I'm taking profits at a level that makes sense. Like, I'm not, you know, it's not like I'm getting greedy. Like, you kidding me? Are you freaking kidding me? Bro, this is so dumb. Like, this is such BS. Why does it do that? But I mean, it's got to bounce here. It's got to hold here. It's got to bounce. It cannot start dipping down and getting below my entry point. It's going to start looking bad if it starts dipping below my entry. It's got to hold this as support. We're still above VWAP. I mean, crap. We rejected the freaking pivot. I didn't notice the pivot was there. Oh my god. I didn't notice that pivot. How did I not see that pivot? Literally was talking about it earlier, how you got to be careful at those pivots. But I have my TP at the body candle highs of the most recent body candle highs, pretty much. So, I mean, I think it'll go for it. It's just pulling back to find some buyers, maybe. Come on. Rip it. Let's go. Let's get it. Stop being freaking... Sorry if I'm not answering questions. I'm too focused on this price action. I'll answer questions once this trade is over and I can relax. Alright, we gotta start pushing, breaking the high. Come on. Bro, you're so freaking close. Are you kidding me? Bro, it just gets to that pivot point. It just stop. Nope. 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 This guy is swatted. That pivot point just gets swats price right back down. Come on, just a little bit of a wick. Just a freaking whoop. 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 Quick. Quick. Whoop. That's it. And then you can go back down. God, I may have to just take this off here. As soon as I take it off, it's gonna run through that take profit. I guarantee you. There it goes. It wants it. It wants it. It wants it. I see it. It wants it. It wants it so badly. Let's go. What are you doing? Bro, this is giving me... Bro, this is edging the crap out of my You freaking kidding me, dude? This is like torture, dude. This is straight up just unnecessary punishment. Like, are you freaking kidding me, dude? You've gotta be kidding me! Like, one tick away! It's like, am I putting my TPs at like such crazy good areas that... Alright, there it is, there it is, come on! You're so close! There you go. Finally. Holy crap. Let me see my copy trader. I gotta make sure everything's flattened. Bruh. W. Here's the thing, right? I was so... What's it called? What was I gonna say? Hey, let me make sure that... Alright. I was so, so close to getting out, market ordering out. Because, to be honest, I don't know how I calculated price. I calculated it wrong. Meaning my position size was a little too heavy for me. But from what you normally want to risk. So I ended up risking more than I wanted on that position. I don't know how I did the math wrong on that. But I was so close to exiting out market order. But here's the mindset, right, that I go through. Is like... And this is why you shouldn't be over leveraged, because every little pullback starts to freak the crap out of you. But when you're position sized correctly, you can sit back with and you're fine. And here's my mindset. If price gets super close to my TP, you know, and I just take profit early, all the time, early, well, then I look at it this way, right? When price comes to my stop loss, I'm not taking the stop early, right? When it's super close to my stop loss, I typically let it hit my stop loss. So why would I get out early when it's at my TP? Why wouldn't I just let it hit my TP? So that's the I literally had my finger on the button to click sell market, and then I just kept. I'm thinking, I'm like, I can't sell. I can't. It has to hit my TP. Because if I'm gonna keep doing that every single time, taking profits early from where I wanted to, that adds up over time. But you just have to follow your plan, pretty much. Basically, it was but that's what I'm saying. I mean, I knew why price was having such a hard time there. We have a pivot point right there, right? So that's why price was having such a hard time getting through that pivot point. Bro, I was so focused. This pullback right here scared the crap out of me. I'm not gonna lie. This pullback right here scared the. I was like, no way is this gonna reverse on me right now. But yeah, sorry if I missed a question. If I didn't answer a question, just ask it again, because I was way too focused on price. And how good are you at basketball? I actually played in school. What's it called? I didn't play. I played in school when I went to school. I was a point guard. Dude, I used to play basketball every day. That was like my life. When I was like in I forgot what grade I was in, but I would literally come home from school and we would go to the courts every single day till it got dark. Somebody asked about basketball. That's why I yeah, I'm copy trading. So that was $600 across 7 accounts. Yeah, that was a good trade. Dang, 600. What is that? I'm bad at math. That's a $4,200 trade. 600 across 7 accounts. Let me see. You know what I've been noticing? Oh, okay, this is fine now. That was a really good trade. Can you go to Bloom Energy Corporation and tell me if it's a good short? I mean, I can't tell you if it's a good short or not. I mean, it's like you have to. That stocks can move differently, right? The way NASDAQ moves can move differently than something else. So I can't really apply. I mean, I can, but like obviously I can't guarantee. I'm not a financial advisor, so I can't tell you if something's good or not. You could watch how I trade and then try to apply it to that stock and back test it and see if it works. Looks like I should have had my TP at the highs, but no, I had my TP at a good area. It was the safest spot. That body candle high, if it was gonna, it was a good area for TP. I can't, regret. You know what would have been a good entry? Whoever was right. What I should have done? I mean, this is hindsight, obviously, hindsight trader, but I got in at this bigger gap. I just like to get in on bigger gaps. This smaller gap, remember I was looking at this smaller gap. I was like, I don't know, I don't really like taking the smaller gaps. But that smaller gap ended up being the best entry point right there. That tiny gap. So if I would have had I was thinking about doing it, and then I talked myself out of it because I figured, like, I don't like taking small gaps. But yeah, this thing literally pulled back to this last imbalance right there and then ripped right from that. So, bro, I would have made an extra. That would have been an extra, what? Hold on. $20, $40. Right? So that would have been an extra $40 per contract. So that would have been an extra. I had 7. So that would have been an extra $280 in profit if I would have took my entry there. So that would have been the best entry, but it's fine. I took it where I... It pulled back. I don't understand, but I'm here. Well, yeah, if I could teach you something... is copy trading and day trading different? No, copy trading is, it's different. Day trading, so there's two types of trading. There's swing trading and day trading. Swing trading is when you buy something and you hold longer than one day, right? So you hold it overnight, you hold it multiple days. That's called a swing trade. I don't swing trade. Day trading is any kind of stock, option, whatever you buy. If you buy it and sell it in the same day, that's called a day trade. So what I did here was a day trade. I bought it and sold it within the same day. Now, copy trading is when you have a prop firm account. Like I have a trade. I take profit trader, 2 trade profit trader accounts, 7 Apex accounts, actually in 10 funded accounts. So I have multiple funded accounts, right? Copy trader is when you take those accounts and it's called Replicanto copy trader, what I use. And pretty much what that copy trader does is you have your main account. When you take a trade on your main account, it copies it across all the other accounts, right? So I took a $500 profit on one account, my main account. But that $500 profit got copied across 7 other accounts. It took the same trade on 7 other accounts, right? So it multiplies your profit, but it also multiplies your losses. So you got to be careful with that too. Where's price at? Oh, holy crap. But yeah, that's pretty much what a copy trader is. Very powerful if you can manage risk and, you know, you have a strategy that you follow. Copy trading is where it gets really powerful. That's why you see people make, you know, on funded accounts, people are getting a couple $100,000 in payouts. It's because they're copy trading. That's why. So I made $500 in each account. So that would be $500 times 7 accounts. That's pretty much a $4,200 trade. Yeah, copy trading is the move when you have a plan, right? You're disciplined, you have a plan, you follow your strategy, then copy trading becomes really powerful. If you don't know, like if you're still learning how to trade, I would say stay away from copy trading until you've proven yourself that you can make money, right? You could be disciplined and you can make money month after month. Now you might make it but the losing months that you have, I'm not saying you can't have a losing month. If you do have a losing month, it's minimal, right? You're not blowing accounts. You're managing your risk correctly. You're following your rules. Your psychology is there. Then when you copy trade, it gets powerful because you can really capitalize on your trades. But if you don't know what you're doing, right? If you're still learning and you're still trying to learn a strategy, copy trading, it amplifies your losses, right? Because you're buying accounts and then you're blowing those accounts. You're blowing hundreds of dollars, right? So potentially, depending on which accounts you get, right? With Apex, it's not, I don't know. With Apex, it's not, it wouldn't be. It's 33, it was 33 bucks an account when it was 80% off. So it wouldn't be, depending on how many accounts you get. But you see my point, right? So it's just, it multiplies everything. So don't think it just multiplies your profits. It also multiplies your losses. So with copy trading, you especially have to be even more disciplined. And don't get greedy also, right? Trailing draw. A lot of prop firms have trailing drawdowns. So you don't want, like for example here, right? I don't want to be oversized. Price rips up and I'm still in a trade and then this price comes back down. All that just trailed, right? All that profit just trailed. If my account was at an all-time high, that just trailed. So if you oversize, there's a possibility you could blow your account if you're oversized, where it goes super in your profit and then it pulls back to your break even and then you blow your account because that profit got trailed. So be careful with that. Do not day trade or copy trade. Will be 100% loss in the end. Just invest and hold. I mean, everyone, yeah, investing and holding it's a safer option. Now, is day trading possible? Yeah, it's possible, but it's very hard. It's a lot harder than buying the S&P 500 and holding it for 10 years. I mean, me personally, I like to day trade, but to each his own. It takes a lot of, I mean, here's the thing. Day trading is very hard because it takes a lot of mental discipline to not go on tilt, be properly sized, discipline, have a strategy. That all plays into day trading, especially in day trading. You can make some mistakes. You know, you can make mistakes buying the S&P 500 and holding it, and like you buy it the wrong area, it goes up over time. But day trading, if you buying and holding and you make a mistake and don't sell, you can get burned really bad. Static accounts don't have, yeah, static accounts are good, but some of them have, I got a static account. I still have that static account actually, but it only had $600 in drawdown, which is like, I mean, that's not enough drawdown. You got to be very, very like accurate with your trades and disciplined with smaller draw. But if you can get it, yeah, a static account with no live trailing drawdown, that's good too. But for me, the trailing drawdown doesn't matter because I take 1-to-1 trades. Like I scalp pretty much, right? So I take 1-to-1 trades. So that really, the drawdown doesn't affect me really. And I don't really take more than like 2 losses in a row. So it really doesn't affect me too much. I bought 20,000 shares at 39 cents. Oh, that's dangerous. That's more dangerous than what I'm doing, bro. You're buying I used to trade penny stocks. Penny stocks are even crazier than this. Bro, I got my ass handed to me one time in penny stocks. I was actually in a hole. Buying and holding penny stocks is a really, really, really dumb investment strategy. Don't do it. Trust me, do not buy and hold penny stocks as an investment. Every company that's a penny stock is pretty much a garbage company that's going to go, most likely 90% of them are going to go under someday, right? It's not a good freaking thing to do. Trust me. It's sketchy companies, especially like, do what you want, right? But I'm just warning you. It is dangerous. Yeah, static counts if you're above the 100K. Yeah. What is a drawdown? Drawdown is the amount of money you're able to lose before you blow the account. So, for example, a $50,000 account, these accounts that I'm trading that have 7 of, it's a $50,000 account for an evaluation, for example, $3,000 profit target and a $2,400 drawdown. So if you lose $2,400, you pretty much blow the account. Sell now? Oh, hell no. I would not sell up here right now. I'm all about confirmations, right? Price has to give me a confirmation. A lot of traders, the mistake they make is they just see price at a certain area and they want to just sell. Like sell, sell, sell. They're waiting for that little pullback. And the price keeps ripping and ripping and ripping and ripping. And they just, you know. For me to get into a short, this would need to confirm that it wants to go down, actually. Right? The structure would need to tell me that it wants to go down. Like what happened here at the bottom. And why I got into that long. I'm up 1,200. I'm up 1,200%. Sorry, I couldn't even. Where was it? Up 1,200% this year, was up 400% last year. Advantage. I mean, I'm not saying you can't be profitable in it. Of course you can. I know of traders that trade penny stocks and they're profitable in it. They're good at it. But you got to be disciplined and you got to be super careful. Like, if you day trade penny stocks, the people I know day trade penny stocks, right? If you're swing trading penny stocks, I don't know. I wouldn't. I don't. So I had a scenario where I had invested some money into, I think it was considered a penny stock. It was a Chinese company, and what do you know? They were falsely making like sales reports. They were doing some really sketchy stuff. News came out that they were doing some sketchy stuff. Stock fell 90%. So the money I had invested in it, I lost 90%. Eventually, I had to sell. There was a class action lawsuit. I was a part of the whole class action lawsuit against the company. I got a little money back, but it was nothing compared to the amount of money I lost. After that, no more penny stocks. See, NASDAQ, that's not going to happen in NASDAQ, right? No news is going to come out in NASDAQ that they're doing sketchy stuff and falsifying sales histories and this and that, and it's going to drop 90%. That just doesn't happen in NASDAQ. It's not going to happen. It's not possible. So NASDAQ is a safe play for me. It's very predictable. It's a very reputable, right? Like it's not some sketchy company. It's multiple companies into one. So it's massive companies. So that's why I like trading NASDAQ and futures. Trading penny stocks, you never know. Any second, some news can come out that they're doing some sketchy stuff or whatever, and that in a matter of freaking 1 minute, it could fall 90%. So I don't trade penny stocks. Just stop teaching day trading to beginners. It's irresponsible just for views. Bro, how is it irresponsible? How am I doing it just for views? If I was doing it just for views, that would imply that I'm making money off the views I'm getting. Bro, I can get 10,000 views right now. I won't make a penny off those views. So what are you talking about making money off views? I'm literally not making any money off any views. So I don't sell a course. I would argue trying to tell people to buy penny stocks for long-term holds is a crazier thing to tell people. Any person will tell you penny stocks are I don't recommend penny stocks. It's a bunch of garbage companies. That's what it is. A bunch of garbage companies trying to raise some capital that eventually most of these companies probably go under. So yeah, I don't know if you lost money or something, but for somebody to learn how to actually trade and like day trade or whatever, futures, I think futures is the way to go. Especially with evaluation accounts, to be able to apex 80% off, when it's 80% off and you can buy an evaluation for 33 bucks, and you can actually learn how to day trade, manage your risk properly, have a strategy, you can get some crazy payouts. You can go a long ways. You're kidding yourself. You make money and feel smart and want to show off. Well, that's exactly why a lot of people lose money in day trading. Make money and feel smart and show off. What am I showing off? I'm not showing off anything. I don't have a Lambo. I don't sell a course. That's why, and that statement is exactly why a lot of traders will never become profitable. Why? Because if that's your mindset, is to try to make money, meaning obviously everyone goes into trading to make money. But if you're doing it to show off, to try to feel smart, to feel correct, if every time you have a winning trade you feel like you're super smart, then you're going to have a losing trade and fail to accept the loss because your ego is going to get in the way, and that's where most people fail. It's not the person who takes the most winning trades, it's the person who can accept the loss. and who can manage his risk correctly and manage his mindset, not go on tilt. All that matters. But you have to take ego out of that. And a lot of people don't last long enough to even learn something, right? This whole mindset of get rich quick does not happen in trading. But I guarantee you this Rushmore guy is a bot. First of all, he has 0 followers. He doesn't have a profile picture. The chances of this guy being a bot are super high. What, do you know some person named Linda who helped you make $14,000 in one day? Linda helped me. I was struggling and Linda helped me make $14,000 with a $100 investment. I made $14,000. Message Linda for more information. Get out of here. I guarantee you this guy's a bot. Trying to sell some kind of freaking... So why are you teaching at 97% losing game for professional traders to beginners? You want to know why the statistic is 90? You don't want to know why the statistic is 90%? Is because people get into it with the wrong mindset of trying to get rich quick. They get into day trading as a casino. They're not trying to develop a strategy, develop their mindset, follow a plan, risk management. They're not trying to do that. 90% of people are not trying to do that. They're trying to quickly over leverage, try to win big in one trade, get funded, win big again, take a payout. They treat it as a casino, and that's exactly why most traders fail and continue to fail. It's not that it's impossible to do. It's because most people enter it the wrong way. If you enter it and you look at it as a business of managing risk and probabilities, you're looking for an area according to your strategy where it's a higher probability. There's certain areas in the market that are higher probability to get to your TP than your stop loss. That's all you have to do. Follow your plan. Have a back test the strategy that you find profitable. Follow that strategy. Manage risk. You know, that's all it takes, but most people won't do that. Most people won't do that, so they continue to lose. They continue to not learn from their mistakes. And what happens when you don't learn from your mistakes? It's the definition of insanity. Doing the same thing over and over again, expecting different results. So if you continue to lose in trading and you don't learn from your losses and why you continue to lose, you're just insane. That's the definition of being insane, is you're expecting to become profitable without trying to improve. And that's why most traders fail. The barrier to entry in trading is so low that most people just throw money at it without having a strategy. And prop firms are a great example of that. The fact that these prop firms, right, make millions of dollars a month from people failing accounts is a perfect example of people buying accounts, over leveraging, blowing accounts, buying another account, over leveraging, blowing account. And the cycle continues. The cycle continues. And then the people who actually take trading seriously, they end up learning it and they can make money from it. And the rest just continue to be unprofitable. You really gave no idea what you're saying. Anyone can make money in this market right now. This guy's a bot. That solidified that this dude's a bot. You really gave no idea what you're saying. First of all, that grammar makes no sense. Second of all, anyone can make money in this market right now. Okay. So you're telling me a 90% failure rate and anyone can make money in this market right now? Anyone can make money in this market right now, but can everyone make money long term? That's the question. That's the thing about the market. You can make money in one trade. You can make money in two trades. When I started trading, I went on a 2-week win streak. not understanding what I was doing. No, not really any strategy, nothing. 2 weeks of winning without any kind of proper risk management or anything. But guess what? One trade is all it took to blow my account. That's the thing about the market. It will reward stupid behavior, right? Stupid behavior of over leveraging, being oversized. It will reward taking out your stop loss. It will reward you a couple times here and there. But guess what? Eventually, it's going to come back and you'll blow your account. Everything you ever made in trading will get blown out the door. You're going to get people to make money in this market. There is going to be bearish. What? You're gonna get people to make money in this market. Then it goes bearish, which it will, and they lose it. You're gonna, like, I don't get what you're trying to say, sorry, but you're gonna get people to make money. How can I get people to make money? I can't get anyone to make any kind of money. All right, you're right. Nobody should day trade. Nobody should learn it. You're right, man. I really do, like, if you're not a bot, bruh, you talk like a bot. Well, it's hard when I don't have a lot of character. I'm assuming that's character to work. When I don't have a lot of character to work with. And first best thing you said was none should day trade. Honestly, I don't recommend, I never recommend day trading to people. Why? Because it's tough. Because the amount of time the people come in with the wrong mindset of, oh, I can learn this in a couple months. I can learn this. And it took me years upon years. It took me years of coming into the market and staring at price action. Like, it takes so much effort and being obsessed with trading and learning about it and continuing to learning from your mistakes. It takes years upon years. Maybe for some people it takes faster, but for most people it takes years. And it's like, it's a very difficult thing. It's a very, very difficult thing to do, but it's possible to do. It's the same thing as a restaurant business. Let me Google right now. What percentage of restaurants fail within the first 5 years? What do you think it is? What percentage of restaurants fail in the first 5 years? All right, approximately 50% of restaurants close within the 5 years. A statistic that challenges the more extreme 90% failure rate. While initial survival rates are higher often than believed, with around 80%. So, okay, so even a 50% failure rate. If there's a 50% failure rate in the restaurant industry, does that mean that you shouldn't start a business? Because 50% is still a pretty high failure rate, right? You're tossing a coin if you start a restaurant, whether it's going to be successful or not. Does that mean you should not start a restaurant? Does that mean nobody should start a business because a failure rate is so high? If everyone was scared to do something, nobody, you know, it takes risk. It takes discipline to make money. %7%. But you know why that percentage is much more? Think about it logically. Why that percentage is much more? Day trading, you can invest a little bit amount of money and start day trading with actual live capital, right? You can take $1,000 and start day trading in a live account. A restaurant business has a very high barrier to entry. You have to invest hundreds of thousands of dollars to start a restaurant. You can't just take $1,000 and open up a restaurant, right? So obviously, the barrier to entry is so high that in order to get into there, you need to have a lot of money. So the fact that the barrier to entry is so high and the failure rate is 50% says a lot. I guarantee you, if the barrier to entry in day trading was very high, where not everyone can just start day trading. Maybe you had to prove to yourself, maybe you had to, you know, do something that made the barrier to entry in day trading very high, I guarantee you that failure rate would be a lot lower. For example, doctors. If a person can just take a online course and get a certificate to become a doctor, right? The failure rate would be crazy. We would have people dying left and right. Doctors, right? It takes a lot to become a doctor. For some reason, people can go to school for 4 years in college, graduate with $200,000 in debt, and then start making $40,000, $50,000 a year, and that's fine. But when somebody doesn't become profitable within 2 years, it's like you have to put in the same amount of effort as if you're going to college and learning some kind of. A day trading is a very high very high income skill. So it's obviously any high income skill, you're gonna have to put in a lot of studying and effort and to actually get it down and learning from your mistakes. So you just have to think about it logically. It's that statistic is a little skewed considering most people treat it as a casino. So obviously that statistic is going to be skewed. And most people start trading with live capital. I don't tell people. I tell people personally, don't buy a course. Don't invest any amount of money when you're learning how to day trade. Don't invest any money, right? Paper trade. Become obsessed with learning how to trade on YouTube, right? Learn how to trade on YouTube. So much free content. Find a strategy. Paper trade that strategy until you prove to yourself that you can make money consistently with that strategy. You can manage risk. Then you can move to passing an evaluation, getting a funded account, and then you can scale the crap out of those funded accounts when you learn how to day trade. That's the path that everyone needs to take. I didn't take that path. I screwed up. I started day trading with live money, but we didn't have funded accounts when I started to day trade. So, but no one that's learning how to day trade should ever invest any kind of money until you prove to yourself that you can make money for at least 4 months. Can prove to yourself that you can manage risk and consistently either be break even or make money on those months. Because some people have to go through, some people have to get slapped in the face by the market to learn from their mistakes. That's what I had to do. I learned from my mistakes. I had to learn the hard way, right? Canceling my stop, I had to learn the hard way. Now I never cancel my stop. It's just certain things that some people have to go through to learn, and preferably you learn that on a simulated account, not actual money. So, what time is it? It's almost 11 o'clock. Dude said, have fun, bro. I got things to do. While my portfolio makes 10x yours, I have to do nothing. Okay. Go relax and sip some pina coladas on the beach. Bro, I'm not hating on you. If you're actually successful and you're actually making money in penny stocks and you're actually successful, all power to you. I'm happy for you. I'm not hating on you. If you're actually successful, right? But I'm just telling people to be very careful with penny stocks. So I have somebody hating on me, telling people to be very careful with penny stocks, because a penny stock is a company that, right? Actually, I'm curious of the statistic. How many penny stocks end up going under? There's no exact number. Dang it. Oh, okay. There isn't a single exact number for how many penny stocks go under, because it's a continuous process and tracking data isn't readily available for all penny stock failures, especially those in the over-the-counter market. However, penny stocks are known for high failure rates due to low liquidity, high volatility, and limited information, making them a risky investment with significant likelihood of losing value or becoming worthless. Significant likelihood of losing value or becoming worthless. So obviously when somebody tells me that they're holding long-term investing in penny stocks, bruh, unless you're some genius, bruh. So obviously I'm going to tell people to be very careful. What's liquidity? Liquidity is like when you have the amount of buying and selling going within a market, right? When you have a lot of buying and selling, like for example, NASDAQ, ES, have tons of liquidity. And you need liquidity to get into a trade. For example, trading, right? Trading, when you're trading in a live market, when you buy something, you need to have someone on the other end selling you those shares or contracts or whatever, right? So when I'm trying to sell something, when I bought contracts and I want to get out of those contracts, I need to have somebody on the other end buying those contracts from me, or else I can't sell those contracts. So what happens sometimes in penny stocks, you can get into a trade with low liquidity, right? And if you get in heavily invested, there have been people who have a hard time getting out of their position because there's nobody on the other end that wants to buy your shares or whatever it is. Low liquidity, and a lot of times low liquidity, it doesn't move, right? It goes sideways a little bit. It's very hard to get in, very hard to get out. So I just to each his own. I'm not saying don't learn about penny stocks. Do what you want, but I'm just saying be very careful, right? Wrong, there's always liquidity. Wrong, there's not always liquidity. If you trade penny stocks, you know that there's plenty of penny stocks that have no liquidity, like barely any liquidity. When something is trading at 2 cents, it's not going to have a lot of liquidity usually. It's how the market works. You need a buyer to be able to sell to in a live market. Obviously, trading prop firms, there's sim accounts, so that doesn't apply to prop firms. But a live market, you need to have somebody on the other end selling you something to buy it. If there's nobody selling you anything, you can't buy something that no one's selling. So is risk management basically how much money you're losing? Yeah, so risk management, and it's like it's the heartbeat of trading, right? Whether you're investing, whether you're, trading long-term, swing trading, day trading, risk management is key. And it's something that you have a plan and you have a set amount of how much money you want to lose per trade, right? So say, for example, I don't want to lose more than $300 per trade. So when you're about to get into a trade, you look at the structure of price and you size accordingly with the contracts needed, depending on where your invalidation point is in the market. And you use the amount of contracts to be able to risk the amount of money you want to risk, depending on where your stop loss is. So that's risk management. You should always have a stop loss, and that level is, if price hits my stop loss, I don't even want to be in the trade. So that's called risk management. What a lot of people do is have no risk management, and when they don't have a stop loss and price goes against them and they keep losing and losing and losing, they lose money, they keep losing money, they keep losing money, and they blow their account. So without risk management, you end up blowing your account, losing a lot of money. So that's why it's like, you got to understand where your stop is, where your profit target is, and have a plan before getting into a trade and managing correctly and not canceling your stop, not moving your stop. I used to trade penny stocks. When I did, I would only trade penny stocks with volume in millions. Yeah, that's what I would do too. I literally had I had a thing, it was like a program thing where it showed I forgot what it's called. It's like volume, implied volatility. So like I would only trade penny stocks with like millions, of volume. So I would do the same thing. But there are, I mean, you've traded penny stocks. You know that there are plenty of penny stocks with barely any liquidity in them. So it's like, I don't like it. I mean, maybe if you day trade penny stocks, it's still, I mean, you can day trade them. It's a little, I think it's a little less risky. But here's the other thing with penny stocks, right? Penny stocks, if they move too volatile, you have, what is it called? When the market stops, when market gets halted, right? Sometimes market gets halted. If you're in a trade and the market gets halted, and then it ends up opening way down there, that can really screw you up. So that's another thing that happens in penny stocks that doesn't happen in futures. For the market to halt in futures, something bad would have to happen. But penny stocks, markets get halted every single day in penny stocks. So, me personally, I would never go back to penny stocks. But, like, I don't regret doing it. I mean, I've learned a lot. But I don't think I'll ever go from futures, to be honest with you. Where's the best place to put a stop loss and take profit when I'm doing? That all depends on strategy. So that's why it's important to have a strategy. When you have a strategy, according to your strategy, you need to have a specific stop, and according to price action, according to market structure, right? Every strategy is going to have different profit targets, different stop losses. It all depends on your strategy. And whatever that strategy is, that risk management for that strategy, that's what you stick to. Like, my risk management for someone else's strategy may not work. Somebody else's risk management for my strategy also may not work. So, it all depends on the strategy. And your account size, right? Like, you don't want to take 1 or 2 trades and blow your account. So you have to also position size correctly per trade to allow yourself losing trades, because you will have losing trades. Which prop firm do you recommend? I mean, it depends. Apex is a good prop firm for beginners and advanced people. So Apex is a cheap prop firm. Take Profit Trader is a good prop firm. Tradeify is a good prop firm. Each prop firm has its own benefits and minuses. So, but Apex is good. I would, whatever prop firm you go, just go with popular prop firms. You know, Apex, Take Profit Trader, Tradeify, whatever it is. I mean, it's gonna practice some more today on paper. Yeah, practice on paper trading, figure out a strategy, have, you know, be able to consistently use that strategy for months. Don't look at this like as a short, oh, I need to make money now. Like, look at this as a long-term play of you learning how to trade, managing risk, getting a strategy, and then long-term to be able to make money long-term, not necessarily this month, next month. But practice, right? Practicing your strategy makes you better at it. Hey, what's up? It's going good. Took a good trade this morning. It's hard. Trading is hard because it takes, right? It takes a lot of getting beat down by the market, getting back up, trying to learn from your mistakes. And I've went through, I've went through strategies. I tried one strategy, tried it, just wasn't working. Tried another strategy, man, just wasn't working. Tried something else, just wasn't working. So I went from multiple strategies, trying them, and it just wasn't working until finally I found something that I like to do, that I understand, and it works for me. So then when you actually finally find that, you stick to it. Do you recommend Apex over all prop firms? Not necessarily all prop firms. It just depends on where you are. If you're a beginner trader, like if you want to trade a prop firm evaluation account and you're a beginner and don't want to trade a simulated account, like you want to have some money invested into it, Apex is the way to go, because it's when they're 80% off, they're like $33 per evaluation account. So you as a beginner, you're gonna blow accounts. So if you can stretch that $33 and not blow it, like blow one account a month and learn that way, you know, that's fine. But like, you know, for example, right, Apex, You keep the first $25,000 per account. You keep the first $25,000 to yourself. Take Profit Trader. There's a profit split. There's like a 80-20. So you keep 80% of your profits and take Profit Trader. But they have a profit split, but they also have daily withdrawals. So it's like each prop firm has its pluses and minuses. So that's why I use Apex. I use Take Profit Trader too. I've been demo trading for like 2.5 years. I think I'm ready to trade live. Yeah, if you're, well, live, I would say get an evaluation account, pass the evaluation account and get funded, and then start to take, like, I just don't see a point of really going live if you know how to trade and are disciplined and you can manage risk. Like, you can milk these prop firms. Like, people get, you know, crazy payouts. You see the leverage that you can have on prop firms. Copy trading, like today, right? Took a $500 profit across 7 accounts. That's a $4,200 day. So when you get to, like, you know, when you get to past the buffer zone in a funded account and you're able to make 4,000, 4,000, 4,000, right? And then you could take a $20,000 payout. Like, I just don't, like, there's so much. Obviously, live accounts also have its own benefits. If you can take, you know, you can take withdrawals every day. But like, take Profit Trader, you can take withdrawals every day, but there's a profit split. So God, this thing just kept running. Maybe I should start leaving runners on the table. Like, imagine if I left a runner. I literally caught one of, like, the perfect move of the day. Not the best, but second best. If I would have left a runner, at least, like, imagine leaving at least one contract to run to, like, maybe the highs up there. That would have been an extra 20, 30, 40, 60, 70, 80, 90, 100, 20, 30, 40. It'd be an extra like $160 right now per account. I have Take Profit Trader, but I've been 3 months and I'm not able to pass the evaluation. I mean, yeah, it's been there. But here's the thing. Here's what's good is you're not failing the account. That's already a huge plus. You're not like the 90% of people that just blow accounts every other day, right? If you've been trading 3 months in it and still have that account, you're doing good. You're on the right track. You just have to focus on the strategy you're using and focus on what you can improve on. Can you be more disciplined with your entries, right? Like, certain times, understand that the most disciplined people sometimes don't take trades every single day. I mean, people have watched me trade live, have watched me go 3 days without taking a trade because I'm trying to be patient for the right setup, right? So, like, figure out what you can do to improve, to minimize your losses, to only take good quality setups, and be okay with going 1-2 days without possibly taking a trade. But you're definitely on the right track. If you already told me that you have an account for 3 months and you haven't blown it yet, you're on the right track. You're already better than what 90% of people do that fail. So, all right, I'm gonna be hopping off here. I gotta go soon. But yeah, good day today. Followed the plan, followed the rules, made some money. We're on the right track. Patience is everything, right? Being patient during the times where the market doesn't give you a setup, and then finally when the market gives you setups, you capitalize on those setups. What's the PP level on your chart? Those are pivot points. So on your brokerage, if you put in for the indicators, if you put in pivot points, pivots along those lines, you should be able to find it. And they're pretty useful, as you could see. I mean, price comes close to them, rejects, like, they're pretty useful. So to have as like understanding that the market could reject there or bounce there. Or I wouldn't use them as entry points, but I would use them like how I use them as gauges in the market. Like when I'm already in a trade, I understand that price could reject there. So yeah, but yeah, R1. That's all. That's the pivot points indicator. All right. Somebody asked a question. Last question, and I have to go. Where was it? Just lost 1,500. Today's on the eval. Yeah. It seems like you're over leveraged. If you lost $1,500 in one trade, it seems like you're a little. If you're on a $50,000 account, it seems like you're a little oversized per trade. Because when you're oversized, you get emotional too, right? So it's a nasty spiral that happens when you're oversized. Like you saw today, for some reason I oversized a little bit on that trade, and I automatically started to freak out every little pullback. So. Sorry for all these questions, but when you get these accounts, when you get these accounts, they give you money in them already. Yeah, when they give you accounts, when you buy an evaluation, it's a simulated account. Even when you get put in a funded account, it's still a simulated account, but you can actually request payouts from that account. But it's still a simulated account, right? They're not gonna put people in a live account. It doesn't make sense for them. They're gonna lose money. Some prop firms do. If you go month after month of taking 1 payout, 2 payout, 3 payout, after a while, there are prop firms that will actually put you in a live account if they see that you're actually profitable. But yeah, it's sim accounts, so they give you an account with technically like fake money in it. Hold on. Last question, sorry. When you get these accounts, I already answered that. All right. Yeah. So, all right. I'm gonna be hopping off here. I'll be back tomorrow, 9:30. Thanks for stopping by. It was fun. R1, that's the pivot points. But yeah, I gotta go. I have somebody coming at 12 o'clock for a car. So yeah, I'm gonna be back tomorrow, 9:30. So if you have more questions, I'll be back tomorrow. But yeah, be safe. Don't overtrade. Don't go on tilt. If you missed the trade, it is what it is. I'll come back tomorrow. There's always gonna be opportunities tomorrow. A car, yeah, that's what I buy and sell cars for a living. So yeah, I'll be back tomorrow. Y'all have a good day, and peace out.